So we have Bitcoin back above $100,000, and in today's show we'll assess what the chances are of whether the crash is over, or are we going to reject and continue towards the downside. There is definitely a major whipsaw effect within the crypto markets. If you do have a look over here on the daily, half the coins already starting to come back strong, and the volatility does persist within crypto, right? If you know how to trade, volatility can be your best friend, but if you're someone new to the markets, it's probably messing with your emotions a massive amount, right? And you may feel something like this, right? So over, we're back, we're so back, it's over, right? This is the cyclical process that you tend to see occur time and time again within the crypto markets. And yesterday was no different, liquidating just short of $1 billion worth of traders in the market. Most of those liquidations, of course, coming from the long side. And this does oftentimes help to reset the market or create major pivot points within the market where you might set in a major low. And that's what we're looking at yesterday. We spoke about the significance of Bitcoin reclaiming the $100,000 mark. And if we did do that on a closing candle basis, most specifically a daily candle close, which we've now done, what the implications would be going forward and why the chances would be significantly higher that we have put in a major low. So we'll have a look at the high time frames, the medium time frames, and the low time frames to assess where things are going next. But I stand by the analysis based off of yesterday's show, and so far so good. We bounced off the exact levels that we gave in yesterday's show. And remember, this was all driven around pretty much what was happening within the AI sector. And you had this massive sell-off over here from NVIDIA. Just to put in perspective, the dump on NVIDIA over here by dropping 23% on this chart is the equivalent of just eradicating and wiping Ethereum completely off the board of crypto in terms of market cap. This was about $500 billion worth of liquidity or market cap just completely erased from NVIDIA. Here's your NVIDIA chart, which you can see is straight up right now, using some of our key significant levels, because there is, of course, going to be implications based on what NVIDIA does. It will affect the stock market. Crypto trades very similar to the tech stocks within the US, and consequently, we want to see health within this market in order to determine whether crypto is going to have a good time or not. So the first and simplest thing that we can look at is the origin of the last move that we had, which for NVIDIA was all the way down here on the bottom at $75. That led to this big move towards the upside. You can see we found a top over here, double top scenario, price pulled back. Now there's always a lot of significance when you come into that 50% level, which you can see is currently where price is situated, right? So we'll assess what happens with the US markets later on today, but my anticipation would be that you're probably going to find some sort of a bottom in this region over here. You should find support, and if you do find that support over there, remember the trend is your friend till the end, and at the end of the day, you will still be putting in high highs and high lows, with this next move coming into the 50% level, key horizontal support being your next major high low, and then we're looking for continuation. But it goes a little bit deeper than this, because of course there is also going to be the effect of what's coming up, which drives all markets, that being the FOMC, right? The FOMC is coming out tomorrow. Expect that there will be a little bit of de-risking going into that event. Typically what happens is investors will continue to hold through their positions, but it's the short-term traders that might eliminate some of the risk, right? The speculators still hold a massive weighting in terms of driving volume within the market. So expect a little bit of a drop in volume over the course of today and tomorrow. That means don't expect V-shaped recoveries for the broader market. Expect a little bit of chop, and you want to see bulls defend the lows that have been set in across the board over the course of yesterday, right? So a lot of important things to be looking at. If we look at the S&P 500 futures chart over here, which is essentially your US stock market, well, what we've seen over here is, of course, we had the downsloping trend line, essentially price pushed up, right? We did break structure. This was your last lower high. Here was your low. You've now created a higher high, and therefore this is probably going to be your next high low. Also lining up with that 50% level, you can see coming in at 5,946, right? Why this level? Well, this is your mid-range. Typically, when you look at trades and trading, you have your range high, you have your mid-range in the middle, and then you have your range low at the bottom. Now, this is known as your discount zone in the bottom half, and this is known as your premium zone in the top half. But If price can maintain above the 50% level, the mid-range, this starts to establish a new discount zone. So what was the previous discount zone? Those price levels get defended, and this becomes the new discount zone, which means that is the area of interest where you want to be buying. People typically want to be buying things at a discount. So a lot of traders will be focused on these levels, the mid-level, as well as the downsloping trend line, which you've now come perfectly to backtest, and you might see buyers step in to attempt to defend this as, of course, a discount zone, at which point you expect your new premium zone to be in price discovery, where the S&P 500 should move up into new major highs, right? So if we do look at the stock markets over here, you can see this is your S&P 500 on a higher time frame. This is the NASDAQ, which is built up of the majority of those tech stocks over here on the right-hand side, and also trying to find support over there. And then you have the Dow Jones Industrial Average, which did something very, very different. Why is that? Well, typically, if you look at the industrial sector, well, this is not going to be affected by AI, right? Things like NVIDIA, which hold up a massive weighting in the rest of the stock markets within the US and the tech stocks. So this is the reason you saw the massive dump over here. Whereas if you look at the Dow Jones, this has been relatively strong and actually about to challenge those prior all-time highs in a couple of days' time, right? So all in all, that's looking good. We're waiting for things to play out. Again, I mentioned volume will likely diminish, which means that crypto volume will also probably continue to diminish. You can see this trending towards the downside. So I would love to see if this can start to find support over here at this gray line, that being the $75 billion mark, and you can start to put in a bit of a higher low over there and then attempt to move it back towards the upside. So over the course of the next 48 hours leading into the FOMC, the market will definitely be paying massive attention to that. And there is that common joke within crypto circles that this FOMC is the most important FOMC until the next one. But literally, it really is. It's really, really, really important because the crypto market, at least, especially when you look at things like Ethereum, are absolutely seeking some sort of direction, and they're looking towards the Fed to see, are they going to pivot from what's tight monetary policy into more loose monetary policy? And that announcement typically comes in a document which is produced by the Fed, which should come out tomorrow. So we'll pay attention as that information comes out. All you want to do is see bulls now defend some of the key lows. You want to see the volume hold up at this $75 billion mark, and then hopefully it's nothing but opportunity, right? So just quickly looking at the overview of the weekly chart over here, there's nothing bearish on the weekly chart. Everything is absolutely incredibly bullish over here. So your high time frames are still looking very, very good. And this is simply just ranging following what was previously a pretty sizable move. Now, the levels still maintain the same zone of support, right? This is still key and significant. As price moves up higher and higher, we'll start to adjust what are the relevant and significant support levels. Right now, your most significant level remains $89,000. If this is a dead cat bounce or fake rally, a relief rally, and it's going to be met with resistance and sold into, and you see the NVIDIA chart continue to break towards the downside, stirring more panic within the markets, well, this is the level you want to focus on, right? When it comes to Bitcoin, you want to be laser-eyed onto this key $89,000 level. You have a trifecta of support in the form of your 21 exponential rising towards the upside. You have your strong horizontal over there, and you have your stop and reversal indicator, which is also in alignment at the exact same zone. So that is your do or die zone. That is your highly significant major level of support. But as it currently stands, well, this candle is still possibly going to turn or close the week green, right? So we need to wait for this information. The market will start to look incredibly bullish if this candle does actually start to close with a full closing candle outside of the top side of the trading range over here. You can see the exact level where every bit of rejection has come in is 104,363. This candle over here on the week of the 9th of December, that closing candle on the weekly scale failed to close at that level, right? The next week opened at that exact level, rallied slightly higher to only be bled out all the way through the rest of the week. And then you can see wick over here in the middle of January. The third week of January failed there as well. So we'll see. Probably in February is where you're going to start to take out this level over here on a closing basis. And once you do, your target remains the same, right? About $122,000 is the next upside target. What we can also do is look at the strength of the overall trend on the higher time frames. And if we look at this chart over here, well, there's nothing to suggest that you should be exiting the market on Bitcoin. We'll also take a look at Ethereum and Solana in terms of its trends over here, but prices above the short-term moving average, above the medium-term moving average, which price back tested into, held it as support on the green line over there and rallied up. And that's also above the purple one, which is your high time frame moving average. When you have price above the short, the medium, and the high time frame moving averages, and all of them are angled towards the upside, that by definition is an uptrend, right? You're still in a strong uptrend over here, and the momentum is behind the bulls. Now, the pendulum swings, which I speak about pretty often, where the bears have their chance to take prices down, and then the pendulum will swing back in the bulls' favor. Now, the bulls need to run with it very, very, very soon. Otherwise, the bears are going to once again attempt to take price back down. Due to this, back and forth between the bulls and bears and the pendulum swinging, this is typically where we start to get that range-bound environment, right? Where you see price chopping between two levels. Now, we'll get into the range levels in just a moment. Let's quickly, as promised, have a look at Ethereum in terms of its overall trend. Now, this is still theoretically a weak trend, but it is a trend nevertheless. You are still putting in macro high lows, and you have put in a macro high over here, but the trend is weak. And the way that you can tell that is because, well, price is still respecting the purple moving average, your high time frame one, but as you can see, it's closing multiple candles below the short and the medium, with the yellow one below the green, which means the short is below the green. This elicits a choppy environment, right? So you should expect continuation and continued chop. Now, we have spoken about the possibility for this massive inverse inverse head and shoulders formation, with your left shoulder, your head over here, and your right shoulder on the right-hand side, which would have implied targets, all the way into about $6,000 if you do start to break that out. But understand that this chop will take time to play out, right? You could be looking at just under the presumption of, if you play out a little bit of a symmetrical pattern over here, you can see you might only reach the apex somewhere around March. This is just a rough drawing, an estimate, somewhere in February, March. And typically, this is actually where Ethereum does start to perform, is in February, and pushes through into March for a strong March, right? So for those of you that are maybe giving up hope, let that be a little bit of a silver lining for you over there. If we look at Solana looks very, very similar to Bitcoin. It's in a very, very strong trend, price holding above all those very key levels. Now, let's revert back to the chart that we used to predict the exact bottom yesterday. This was the high volume area coming directly and perfectly exactly into the point of control over there. If I zoom in, I might adjust it ever so slightly, but you can see the candle of this wick hit absolutely perfectly into that zone over there. Really, really, really good trade. I actually did take a short-term long trade, actually on another exchange. I'll show you over here. We will start to chat about this a little bit more. I'm experimenting over here with the OX exchange over here. Open exchange. So have a look at that over there. That was the trade that I took, and it was all based off of this, right? So we said if bulls can start to close back above $100,000, there will be some signs of strength, right? You have possibly put in your high low. Where can we confirm this high low? Unfortunately, we need to wait for some higher closing candles. Bulls need to start to break price above about $105,000 on daily candles to say that this is in fact the low. As it currently stands, this is probably the low, but it's not certain yet. You may see price continue to chop around, as I'm going to show you on the 4-hour time frame in just a moment. So levels are pretty clear. We hit that level, we're holding it. We want to see candle closes now above these high volume areas for continuation, right? So we've also seen leverage be completely flushed. We'll talk about that as well in a minute. This is one of the signs for what you're looking for as well for a major transition or pivot point within the markets. The other pivot level that we can look at is the yellow line, right? If you focus on this yellow line over here, if bulls can start to break above 103,585, that would allow for your RSI to start to trend towards the upside, right? We want to see this RSI trend up, and you can see a lot of the previous bounces that we've had within the cycle have actually occurred right here around that 50% level, right? You get an initial scare dumping below that that 50% level, which is the white line that's running through the middle of the RSI over there, for price only to reclaim. So you can see over here, attempted to reclaim, chopped about, came down again. So you are attempting to flip this level, and this would look like a major low in the market before major expansion occurs once again, right? So keeping a close eye on that. Ultimately, if you want something more precise, we want to see bulls get now today above 103,585, the yellow line, get above that, RSI trends up, and that increases the chances that you'll build momentum to break through the top of the range high, because price is just chopping about, right? Perfect test into the downsloping trend line. This was an absolute perfect, easy trade to be taking. And you can see we pretty much hit to the wick, to the exact level that we had outlined over here. This was based on measuring out from the left-hand side, the 50% level. You'll remember if you go back to yesterday's show, we spoke about this, right? The 50% of the wick, and you can see we wicked through that 50%, which was coming in around that 98K level and started to bounce out of there. Now, the drawing is still relatively accurate because I spoke about yesterday that if there was going to be a short-term rejection, which is ultimately the more likely outcome, that rejection most likely on the 4-hour time frame would come from around about here, right, which is your breakdown level. So as you watch price push up into this region over here, you know, it becomes a little bit dangerous to start to open leverage long trades right now, because the realistic outcome is that you probably push up into this zone over here and find some sort of a pullback and profit taking. And then you look for the high low where into the FOMC, into the de-risking and the low volume environment. That's probably where you start to see things turn a corner, right? Which comes in at your mid-range, right? If you look at the range levels over here, let's just clean that up a little bit for you. If you look at the range levels, what have we got over here? We got our range low, we got our mid-range level, which lines up with the 200 EMA, and we have our range high. So basically in the short-term traders, you should be expecting this. You should be looking for a bit of a pullback from right around here at about $104,000. You know, somewhere around there, you're probably going to pull back down back towards $100,000, and then you should find support at $100,000. That's your high low. You take the long trade over here, you put your stop loss underneath here, and you target at minimum to this zone over here. And if you can start to break and hold above the top of the range high, well, now you can trade it up to 122,000 as per the other chart that I've given you. So that's the plan. That's what you're looking at. I'll make it very, very simple because some of you are super new to the markets. We know this. We can see that especially off of yesterday, the views picked up massively. Therefore, this would be the trade that you're looking at, right? So stop loss goes below there. You trade it at minimum to 107,000 and at maximum to about 120,000. This is what your trade setup would look like. I have no clue why the colors look so terrible. Somebody put this in pink. Okay, it should be red and it should be green. That's fine. There we go. So that's essentially what you're looking at as a trade opportunity. Conservatively, you trade it up to here, right? Aggressively, you can trade it. If you're looking for a much riskier trade, which is less likely to play out, you trade it up to 120,000. At the end of the day, I would certainly, if I took this leverage long based on the pullback over here, so if we get this pullback, let's draw it in again. Price pushes up, reject, come back down towards $100,000, enter the trade more or less over here. I would take at least, I would say about 50% of my profit at this zone over here, right? So at the top of the range high, leave the other 50% in case you actually do break out into price discovery. So looking good, looking good. I see Carlos says, Goku is exploding again. We will talk about Goku. We'll have a look at it. What a coin. That chart is absolutely beautiful. It's doing very, very, very good things. Now, lining this up, this is for the low time frame traders, lining up this potential trade opportunity that we have over here. Again, actually, I can take this one step further for you, right? A little bit of free alpha for you guys all today. Remember, the shows are free every single day. So please do smash the like button, right? Smash the like button. If you want to take an additional trade, you can theoretically take the short as well. This would be a very, very, very easy short trade, right? And we'll just quickly change the perspective over here. Apologies for wasting your time. Not sure why this has all been adjusted so heavily, but anyways, let's quickly Put that in over there. Now, this would be what you would call a head short trade. You could be looking at something like this. I'd wait for it maybe to just push a little bit higher. But generally speaking, you're looking to enter into a head short trade with your stop loss above the breakdown level, which is coming on the 4-hour candle over here. It would be your high is 102,452. So slightly above there, right, is where you would leave that level. There it is. Look for the short trade. You know, you could push up a bit higher. Look for signs of rejection. Yeah, easy. You can chuck in a trend line here as well. There it is. Put in a little bit of a trend line. Let's change the color on that as well. Feel free, guys, take a screenshot of this. What color should we make? Let's go yellow, and let's make it nice and big. So essentially, I'd be looking for something like this, right? There we go. And we'll draw it in nice and neat for you as well. And then you flip back into the long trade at the bottom. So here's your trade opportunity. Price pushes up, reject from about 104,300, ride it all the way back down, you know, take your profits, flip long, and ride it up to about 107,000. If the range persists, it's going to reject and come down again. If you break out, you should gain acceptance above the top of the range. And then you can pretty much just trade that to about 120,000, right? And there you want to be taking some serious profit. So that is the plan of action. There it is. There it is in a nutshell. Test me. We'll see what happens. Come back in a day or two's time, and we'll see what happens over there. Now, lining up over here, we're also speaking about this on the hourly time frame. I said, look at the low time frames when you're coming into these key lows. If you start to see the funding go negative, that's a clear and obvious sign that there's probably going to be a bit of a short squeeze, which is now what we're currently witnessing, right? So if you look at that over there, negative funding, right? Just after the bottom was over there. People still continue to try to short over here on this candle, and boom, you get the big move up. So if you print negative funding again on this, in terms of this plan, price rejects, comes back down to the bottom of the range like that, towards that 100K mark, puts in the higher low, and you see the funding go negative over there like that, that is your sign, right? That becomes a strong signal that you can start to open up long trades over there, because a lot of people are getting flushed out of the market, right? Okay, USDT dominance, beautiful rejection over there. Consider yourselves lucky because I know most of the market is probably at least spot long at this point in time. If we did start to break and hold above here, the carnage would have looked a whole lot worse, right? So think of what the altcoin sector looked like, all due to just two candles, 1 and 2. Those two candles over there absolutely rinsed the market, dropping some altcoins down 50-60% in the space of these 2 days, right, over a 48-hour period. So let's say if you get follow through and a rejection over here, at the end of the day, we just want to see, you know, lower highs. As you grind down into this region over here, you could start to possibly put in a descending triangle, right? There's your descending triangle. You know, maybe you get something like that. And if it did line up with my rough drawing over here, that would be sometime in February, which I'll remind you, I just showed you the Ethereum chart and how the inverse head and shoulders on Ethereum could break out sometime in February, or not break out, but at least reach the neckline some point in mid-February to mid-March, somewhere within that vicinity. Now, this lines up really nicely if you try to think of it from that perspective. Remember, trading is about trying to figure out what could potentially happen next. You get multiple puzzle pieces dealt to you each day, and these puzzle pieces are constantly moving and changing, and then you try to put all the puzzles together and figure out what the next plan is or the next major move. Trading is not easy, firstly, and chart patterns can morph and change over time. So, of course, trading is a guessing game for those of you that didn't know, but you have probabilities. That's a good thing. And we always try to side with where the probabilities are higher. So this is just simply thinking ahead to what could possibly happen, right? The DXY, it all lines up as one good trade because the DXY broke this over here. Now you'd simultaneously expect that rejection on Bitcoin from these key levels that we outlined, right around this 104,300, back down to the low to simultaneously occur with the DXY rallying possibly back to the 0.618 and putting in its lower high over there, right? And it's all going to be interesting because it all lines up with, of course, what's coming up tomorrow on Wednesday as you watch this possibly rally in, maybe they do something, maybe they say something over there, and that will create the breakdown. If we do get that breakdown over there, oftentimes these charts are following very, very similar. USDT dominance should break down. And then we have Bitcoin dominance as well, putting in another rejective looking candle, right? This has been a very, very choppy chart over here. I'm on the daily time frame. But at the end of the day, this is, if I'm not mistaken, let's actually just quickly line that up. This is yet on a closing basis, another lower high. Let's just double check on a closing basis. It is, right? So no candles have closed yet above the yellow line. They have just changed it to yellow, which means that could be the rejective candle, right? If we do see, continuation towards the downside over here, the hope remains alive. At the end of the day, you're still putting in high lows though. So we need to reverse the structure, or at least for, when I say we, I mean anyone that has an interest in altcoins and you want the altcoins to rally. That's what you want to see, right? ETH BTC continues to get hammered. I mean, this is just the definition of pain for anyone that's heavily invested into ETH and has been for a long time. I just cannot provide anything that's more painful than this. 1,155 days of just straight down only. But this is what ETH does, right? Despite the fact that anyone new or anyone that's only been around for one cycle may not realize this, ETH typically goes down against Bitcoin for 3 years, and then in the fourth year, it goes up. So this is all par of the course. But now we're in that fourth year where you expect that it should start to go up. And, anytime now, bro, anytime, just let us know when you want to start getting moving, right? For those of you that want to be patient and safe, remember I've spoken about this break of structure level. 0.037 is the level to reclaim. That's where you break structure. That's where you have some signs of life for the ETH BTC chart. And really you can start to say, if you close multiple candles outside this downsloping trend line, then probably the bottom is in over there, and this will start to rally, right? So for now, the pain trade does continue. Okay, if you're on the wrong side of the trade. Here you have Solana. It has hit a key level. That's your 50%. You are starting to close back above that key 50% level of $232, which is exactly what you want to see. Yesterday's candle, though, was trading below that, still managed to close above it, which is a little bit of a sign of strength, right? So it's going to be choppy. It's going to take time, but you kind of want to see over the coming days and weeks leading into Feb, you want to see Solana trading back above the prior all-time high, which was $259 from the last cycle, and ultimately create that high low. Solana is still winning in terms of everything on blockchain-wise, in terms of transactions, number of addresses, every single DeFi metric that you can think of. It's absolutely cleaning the floor in terms of what the other projects are doing. So this is still looking good. We can have a look at some of the other coins, right? Hype, probably better to showcase on the lower time frame, but still waiting for those multiple candle closes above that $25 level. On the daily, if you start to close a daily candle above $25, hype should start to quickly move up towards 32. I have a pretty sizable position over here. And then I did just share with the whale room community this morning. There is something going on over here on Brett, and I actually sized up the position, right? I've taken a bit of a bigger position, keeping it super simple, straight into key support over here. This is the Brett on base, falling wedge, perfectly into support. Find support if you look at the daily candle, which I'll zoom into over there, and you have bullish divergence. So a trifecta of reasons, right? Falling wedge is traditionally a bullish chart pattern. Horizontal support is always the most important level of support that I look at over here, and that is your ultimate range lows. That's 2 reasons. Third reason over there, bullish divergence. And then I guess the fourth reason, you can just say, based on the information provided in terms of that candle, it showed that there was buying pressure and demand that came in at this level. And consequently, I've sized up now my Brett position, right? I believe that if Ethereum does come back, and Ethereum has a run, and it puts in that inverse head and shoulders, which is again speculative, but if that does actually play out, this is going to run. Then you're going to see Pepe, Brett, as well as the other high beta plays running really, really, really nicely. So those are the picks. We can look at Pepe as well. Okay, so Pepe, kind of similar, right? Very, very, very similar price action. You could probably also make the argument that you have some sort of a falling wedge, right? There you have it. some sort of a falling wedge as well for 𝗕𝗬𝗕𝗬𝗕𝗓 coming into that key level over there. It didn't drop down as far as Brett. Brett obviously hit this key level. That would be the equivalent of 𝗕𝗬𝗕𝗬𝗕 having come down to about 1070, right? So that is 1070. All right, let's just clean that up a little bit over there. So of course, confirmation, if you start to close multiple candles, super similar to an ETH BTC chart, close multiple candles above the downsloping trend line on the upper end. And that's the start of the breakout, right? Then at minimum, you target back towards the highs, and at maximum, well, it goes into price discovery and well and beyond that level. So that is 𝗕𝗬𝗕𝗬𝗕. All right, what else do we have? We can have a look at a couple of others. Remember, there's also Andy and Landwolf. These are two of the others. They're literally going to be doing virtually exactly the same thing, right? All of these charts trade super similar, right? Coming straight into key support over here. I do hold positions on these as well. There it is, straight into key support. And then you have Landwolf doing the same thing, right? So let's quickly mark out Landwolf. We can look at that horizontal over there. I don't know if this one's going to have an as picture perfect, not really, an as picture perfect falling wedge, more or less, not exactly the same. And then we have Bird Dog, right? Bird Dog is the other one to look at. There's Bird Dog. So we got into Bird Dog, I think, at about $1 million, $1.5 million market cap, currently trading at $4 million. It's doing okay, right? We want to see it hold this range level over here. Reclaim, it probably does it alongside the rest of those. And then, of course, Goku, guys. Let's go to Goku, up 35%. This chart is incredibly bullish. $27 million market cap. Look at that absolute demand that kicked in over there, right? This is pure natural organic price action trading over here. Attempted to break it down, swing failure pattern. That shows the psychological strength of why this level is important. And that was the level to reclaim. And that level is reclaimed. So now it creates the opportunity for Goku to run it to the 1.618, which is going to give you about a 70% move. And usually when it comes to these meme coins, it doesn't stop there. They usually expand straight to the 3.618, which would be about a 250% move. So very good. The important part to understand is market cap wise, it's only $27 million market cap, right? 270 million is probable within this bull cycle. That gives you a 10x return. And if it does reach into the $1 billion marks, right, you're talking about 40, 50x returns still from here, right? So it's still very early days, I think, for Goku. And that's looking great over there. All right, let me know in the comments what else we can have a look at. I do also want to bring to your attention in terms of AI agents, right? I was having a look at this over here. Because we recently partnered with them, and this is FOMO. FOMO is like Pump.fun, where people were launching all these meme coins, right? Most of these Solana meme coins, which are listed over here, have been launched on Pump.fun. Then you have FOMO. FOMO is essentially exactly the same thing as Pump.fun, but you can create AI agents. So I was having a look. There's only one on their marketplace right now. I'm assuming you can buy this AI agent from the person. I haven't figured out what this one does yet, but there is a link in the description below. Be early to the AI narrative revolution, right? The AI revolution in terms of building AI agents. It can help you with your day-to-day tasks, your business, etc. You can see over here, it's very easy. You just launch an image, put in the AI agent name, AI agent's ticker, language, voice style. You can choose the voice style, American. You want Roger, confident Roger. You can play around with this. Go have a look in the description below, set up the socials, and then simply just create it. Easy. Everything is listed below for FOMO, right? All right. Cool. What else do we have, guys? DOT. We can have a look at DOT. I fear that DOT is not going to look good. I must just be honest with you straight up front. DOT was a previous cycle coin, and my fears are correct, right? So unfortunately, you have so much sell pressure. What you want to do is you want to try and establish positions in coins that have got some sort of a trend, at least within this part of the cycle. There's been no trend in DOT for this entire crypto cycle, right? It's been range low to range high, which is fine if you're a short-term trader and you're looking for to play the oscillation of the move. This is giving you decent moves, right? 158% towards the upside. And then I guess you can immediately flip short and trade it back towards the downside, 63% downward move. So on 2x leverage, you're basically getting 150-ish%, or so 120, 130% move down. So you can trade at 150% up, immediately flip short and do about the same returns on the way down. So that is DOT, right? DOT is not looking good. Look, I think if you want a little bit of 𝗕𝗬𝗕𝗬𝗕𝗏 over here, then yes, maybe you're also putting in a bit of a falling wedge, just like the rest of the market. And if ETH BTC breaks out, you probably find that a lot of the coins will start to break out like this towards the upside, right? So this is a key critical level. If you lose that on dot, 430 becomes your next zone. That's on the daily. Okay, we can look at WIF. 𝗕𝗤𝗕𝗏. Let's go to 𝗕𝗤𝗕𝗏. I also have a pretty large position on 𝗕𝗤𝗕𝗏, and that is similar reason to Brett, right? If ETH runs, then Brett, 𝗕𝗬𝗕𝗏, and the other high beta plays that I've mentioned will do very, very well. If Solana runs, well, you probably, and moves into like a manic phase, hype phase, I think that WIF will also do very well. The other reason that I like WIF, despite that this chart does look terrible, is because it's listed on most of the mainstream exchanges, right? Which means easy access for retail. You have it on the Robinhoods. You have it on all of these, these mainstream apps that retail will typically trade on first. You also have it on the biggest exchange in the world, that being Binance, right? So at the end of the day, it is coming directly into key support. Here's your major support level. And I guess you can make the argument similar, right? Falling wedge pattern. So at the very, very least, you're looking at some sort of a reaction. So if you have a position established, you can make a decision on that spike up. Do you want to take some profits and reallocate on the next high low and give it a chance to really break out or not? So that is the WIF chart directly into major, major, major support. Let me just see if I have another WIF chart with a bit more price history. Let's look at the one on MEXC over here. Give me a second. There we go. Just to showcase on MEXC, because we do need to see where the next major levels are. Because if you don't find support over there and you don't start to break out of this zone, you could potentially go down to 80 cents. And after that, I mean, it gets really bad. Then you're talking about 45 cents on WIF. Okay, so that is the WIF chart over there. All right, what else have we got, guys? Trump, we can look at Trump. Let's quickly go to Trump over here. Okay, so Trump, $5.83 billion market cap. So many holders. 706,000 holders. Can you believe it? So it's attempting to hold this level. We spoke about this as a significant level. You can see yesterday it actually went directly into it at 25. Look, if you can start to get above $35, then you can say that was probably the low, and you're going to get continuation at least to $46 after that. All right. Let's see what else, guys. Let's see if there's anything different today. Because I feel like we're definitely in a bit of an echo chamber. It's very often the same coins. Checks, yeah, we can have a look at checks. Maybe that's a good one to look at. All right, checks. There we have it. Checks USDT. Let's see. Okay, so checks not looking too bad, right? Big move up. This could potentially be your next major high low. I think if checks can start to get above the yearly open, that will start to look really, really strong. I think I had a couple of other requests from the group. Let me just find this over here. I just don't want to dox my whole account. Just give me a second over here. There were a few more that we had in Whale right? That people wanted to see. Some wanted to request for Poll AI, right? Poll AI under the AI narrative. So given AI got heavily wrecked yesterday, let's just see how these have done. So here's Poll AI. I'm currently also allocated into this. I have a small amount of Poll AI. It is vested, so I'll be getting it over time. But at the end of the day, yearly open. Very, very, very similar to the rest, right? You're going to be looking for that yearly open. So I mean, you can kind of make the argument for that trend line over there. At the end of the day, the importance of a trend line, most amount of touch points possible without breaking the candle bodies, right? We haven't violated that rule. We've got candle body closes. The couple of wicks go through, wicks into there, wicks into there, wicks through it, but candle body close, right? So this meets the criteria of the trend line, right? So you could have taken a long over there, stop loss goes below, but in terms of Poll AI, full strength comes back in when you reclaim that yearly open. Then you can say with high confidence, that's the low. And of course you trade it to the highs or even into price discovery, right? So that is Poll AI. There was another request on, here we go, on Nasana. Let's see how Nasana is looking. So similar, Nasana is also sitting at that yearly open. We can definitely put in a bit of a horizontal support over here. So major, major horizontal support, narrowly missed that level. Will it come? It will probably only come back down there into that level if Bitcoin had to drop down to that 89K level. Otherwise, I think that the reclaim of the yearly open over here, specifically if you can get about $2.42 for Nosana, that starts to show signs of strength. And then the low's probably in, right? And then you can trade this back to the top of the range at the very, very minimum, up to about $4.23, and thereafter to the top of the range high, right? So I could very easily see this respecting this as a range in the future. Let me just measure some of this out and see how this would look. Let's grab this. Okay, there we go. Perfect. Exactly what I thought, right? So that would come in exactly at the mid-range. You can see previous support, and then flipped into resistance because it deviated and rejected that. Resistance again, that for Nosana would essentially be that mid-range level. So that's Pole AI and Nosana under the AI sector. All right. Okay, 𝗖𝗥𝗬𝗕𝗓, we'll have a look at that. Has 𝗖𝗥𝗬𝗕𝗓 making any sort of a resurgence? We know this one dumped heavy, down 4% today. Not a good sign, right? Not a good sign. So I made some massive rebalancing of my crypto portfolio over the course of yesterday. I shared every single bit of it with the 𝗲𝗏room members. If you are in 𝗲𝗏room in the private Discord, you would have received that information. And you'd know 𝗖𝗥𝗬𝗕𝗓 was actually one of the positions that I cut. I rotated that into some other coins that I have high conviction in, right? My aim for the next part of the cycle is to reduce the load of coins that I have, because I do believe that once Bitcoin breaks into all-time highs, you know, we're entering into the end game at that point. Altcoins will still probably have some sort of an altcoin season, even if it's to a select couple coins, which we're aiming to monitor, you know, every single day. But I want to have the ability to, if there is some sort of a blow off top or whatever may happen, I want to be prepped and have the positioning to cut positions very, very, very quickly, you know, at the push of a button. Everything in one place, only a couple of coins to manage. I don't want to have a massive portfolio in this next phase. So this was one of the positions that I cut. Again, if you do want that information, guys, it has been dropped over here in the 𝗲𝗏room Discord, right? Everything under Captain's Take over there is listed below. There's a link below for those of you that have been asking. Yes, signups are open, right? You've been asking, yes, signups are open. And you can join Whale School, right? Whale School is free. Just for new people, the difference is 𝗲𝗏room is a private Discord with professional traders, myself and a few other people included. And we guide you day to day with what we're doing with our portfolio. Whale School is an educational course that's free. You can sign up. You have 1 day left. We start tomorrow. Learn to trade like a whale in just 10 days. All right. That's 𝗖𝗥𝗬𝗕𝗓. Let's quickly look at virtuals, just because it's part of the same sector. And I'm wondering, how's virtuals looking? Smashed as well, right? Not looking good, bruv. 7% down, right? 7% down. Where's our little voice skit over here? There we have it.
Brother, what's that? What's that, brother?
A moment of silence for the AI sector. For the AI agent sector, absolutely been wrecked. But yeah, next level of support is going to be for you guys at about $1.53, right? So you want to see support found at 153 if there is some signs of life that come into that zone. And it's all going to stem around what happens over here with the Fed, right? The interest rate decision, what the Fed are going to do in the FOMC statement and the press conference, and the tonality that Jerome Powell will have. This will be the first FOMC under at least Trump, right? So we'll see. We'll see if Trump, you know, has told him say this and say that, and go up there and smile and you know, give the degens a bit of hopium. I don't know what's going to happen. Only time will tell. If you do want to trade these coins as well, by the way, there is CoinW where you can claim sign-up rewards. So by depositing a certain amount, realistically, most of you can deposit between $500 and $3,000, which means you can get a guaranteed $70 to $200 sign-up reward, which you can trade with for free, right? That's free money for you over there. So imagine real-world businesses offered these types of rewards. Absolutely unreal. All right, guys, what else? Mantra. Yes, we must look at Mantra. Mantra has been very, 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 very strong, right? And this is what happens in markets is, you know, the trends tend to continue. So if something was the strongest coin once upon a time, it will probably continue to be the strongest coin for the rest of the cycle. And Mantra is respecting that range. Now, I do believe that this next pump will be the last pump on Mantra for the cycle, right? how high it could go. It could, easily go to $10 to $12. So you could get a pretty sizable pump. I mean, we can actually work out, you don't actually get a more technically perfect bull flag compared to this, right? So according to this, your measured move is going to be about $7 at the very, very least. And that's been a lot of pumps, right? We got into this trade very, very, very early. I think I have it listed on this chart over here. Let me just see what the average entry on that was for Mantra. Let's type that in over here. Mantra USDT. The original entry on this trade was, there it was. So we got in, but that's the first buy, came in at 14 cents, second buy at 60 cents. So we'll meet it halfway. That has been a 1,150% move. So just quickly looking at this over here, I mean, you've had a lot of pumps, right? 1, 2, this is now initiating the third pump. Typically, these things run like in threes, 3 massive pumps, and then you have some sort of a distribution. So I would say that this is probably going to be the last one, right? Another 54% from current prices. And I see we have MJ saying, weird looking chart. It is a weird looking chart. It's let's say it doesn't look organic. It looks very, very, let's say machine driven. I don't know if that's the right word, but it's like they've used a specific market maker to just like perfectly float this chart onwards and upwards, which is fine, right? I mean, amazing. If you knew that they were going to do that, you probably would have gone in with your whole net worth down here and just perfectly ridden this wave. So, maybe they're playing a longer game. Maybe they have serious wealth behind them. At the end of the day, I know with Mantra as well, the tokenomics may have changed. So don't quote me on this, but if I heard something about they've changed, but before they changed, all the tokens were out, right? Which means, there's no raining tokens coming on you from VCs that are being unlocked, and then they're dumping those tokens. But now that the tokenomics may have changed, so you must look into that before. All right. Cool, guys. I think that's it from me. Let's cut over there. I appreciate each and every single one of you. Remember, Whale Room, link in the description below. Whale School is free. We start tomorrow. You have to sign up and get verified today, guys. You must go through the verification process or you can't join Whale School, right? I think we're already actually at capacity. Maybe too late. But that's it from me. I'll see you all on the next one. Have a great day and cheers for now.